All right. Business right about now. A soldier room here, and even and I'm a soldier doing my hype man. Just did this one. All right. So today, all right, here what we doing? We're looking at the base for supply and demand. The topic is supply and demand, right? We're looking at the base, how to properly draw the base and what candles make up the base and how to identify the base, right? And then we'll look at the departure slash the impulse. That is basically how the market leave the zone, right? The rules for that and the rules once we could know how to identify the base, the correct follow the rules for the base, follow the rules for the impulse, and follow the rules for the accomplishments or the confirmation. To confirm the zone, right? So once we could safely confirm a supply and demand zone, it would help us to be able to find these zones, right? Because one of the rules is for a supply zone to be created, it needs to either remove a demand zone or break a trend line, right? So once you can identify the valid demand zones, then you can find the valid supply zones and vice versa, right? So, Devon, I hope you watch the last video. It will help you understand this one and the workbook. So, basing candles, right? Basing candles simply when the market is basing simply means when the market is in a form of consolidation, simply means when there's equal number of buy and sell orders causing the market to just be balanced in one price area, right? That is the basing, right? Now, take notes, right? The rules for the basing candles goes as follows, right? Now, there can only be 1 to 6 basing candles candles at a zone, right? If there's more than 6, then that means that there's too much trading in the area. So that simply means that the zone would not be as high as a probability, or it won't be safe to place a trade in that zone because the price is too balanced, right? So they can only be 1 to 6 basing candles, right? That's rule number 1, right? For the base, right? Make sure you take notes. Rule number 2, the basing candles. No, for it to be, no, basing candles are basically, how to word this? The basing candle body has to be less than the entire candle, right? 50% has to be 50% or less than the entire candle, right? So the basing candle body no, this is for if the candle is if it's more than one candle, right? And yeah, if it's more than one candle, sometimes when it's just one candle, and that's only for when it's at a valley or a peak, then it might be a little more than 50%, right? So the basing candle body has to be less than 50% of the candle. What does that mean? That means that, okay, we have a drawing tool. Let's say, let's say this is the candle, right? Now, this here is the entire candle, everything. And if you know the anatomy of the candle, you know this is a body and this is the wick. This is the entire candle, right? Now, when I say the body has to be less than 50% of the candle, right? I'll use a Fibonacci tool. So we know that this would be 50% of the candle right here, right? Now, the entire body of the entire candle, the body has to be less than 50%. Now here the body is not less than 50% because obviously um, the from here from the top of the body to the bottom of the body is more than 50% of the entire candle range, right? Now for the candle to be considered for it to be considered a basing candle, the body has to be less than 50%. So for this candle right here, if you measure it out, right, the wick is more than 50% of the candle. So the body is obviously less than 50% of the candle, right? For these here, the bodies are less than 50%. You would look for area. Well, for the basing candle area, it must have candles which the body is less than 50% of the candles. You would have a candles that's more, but basing candles, the body is less than 50% of the candle, right? Now I have an indicator that would help you with identifying the basing candles, right? So it's not on right now, but if you look here, you would see 50% body candles, right? I have it off, but when I put it on, um, I would get a red dot on every candle that is the body that's a basing candle. The body is less than 50% of the candle, right? To get this indicator, I'll show you how to get this indicator after. Just remind me, right? So I'll take it off because I don't need it, but if you're practicing, then you probably might need it, right? So yeah, all right. Remember one to six the less candles, the better, right? If it's one to two candles, three or four, that's very good. The more candles, the less of a probability of the zone, right? Another thing, you want it to be tight. You want it to be like a pause in the market. This would be a pause, right? Like a box. You won't, if the zone has a long wick or a long tail, right? Then we don't take zones. Like zones with long tails like this right here, we don't take that, right? Usually, whenever you find a zone with a long wick, is usually the market reacting off a previous zone, right? So let me see if I can find an example, right? So you would find an example like this. Sometimes you would find a zone like this, right? Let's say this was a zone, right? This was a basin zone. And you have a long wick here. Usually what causes this long wick is just the market reacting off a previous zone, like over here, right? Let's say this was a zone and this wick. Yeah, you can take it, but if the wick is really long, you don't want to take it. If the wick, usually you want the candle body to be less than 50%, but not too much, right? You don't want long wicks. You want to stay away from long wicks. Once you see a long wick, just stay away from it. When you see these long wicks, just stay away from it, right? But yeah, so um back to the rules, right? No, now this rule is complicated. How I explain this rule, right? So shit, there you go. Rule number 3, right? The hmm, one sec. Let's see if I can find an example before I explain this rule. Okay, so for this level right here, right? This level right here, right? Now this right here is a basing candle, right? That's the first basing candle, right? And when you join the other basing candles, you just take the you draw it from the highest part of the body to the lowest part of the wick, right? Now, if the entire candle covers the body of the previous candles, then you include the previous candles, right? So instead of drawing the base like this, because you could draw a base like this, right? You would see that for the first candle, the entire candle covers the body of the previous candles, so you would include these candles as the base if they weren't basing candles, but they are basing candles, so you would have included them in the first place, right? Everybody with me, because I don't really have a hype man, so I don't really know if everybody paying attention. Let me see if I can find an example, right? Okay, here we have an example right here, right? Now this rule is a technical to explain. So we have the first basin candle right here, right? Now, the entire candle, this is the basin candle, right? Now, if the previous candles, for the previous candles, if the first basin candle engulfs the entire body of the previous candles, then you include the previous candles in the base, right? So, and I don't expect you to get this one go. We'll be practicing this for the next few weeks. So, we could see here that this is the basing candle, right? This is the body. This is the body, right? This is the entire candle from here, from the bottom of the wick to the top of the wick, right? Now, when you're drawing your base, you have to draw the base from the body of the candle to the highest point of the wick, right? And we can see that we have a wick that goes higher, so we would include this, right? Now, because the body of this basing candle, right, engulfs the entire, because the entire basing candle, this basing candle engulfs the bodies, just the bodies of the previous candle, meaning that the bodies of the previous candle are within the entire candle of the basin, or within the parameters of the entire basin candle, then you include these candles as the base too, right? So the real base, if we include in these candles, we know that we have to draw it from the body, the lowest body, to the highest wick, right? Which would, so the real base would actually be from here to here, right? Because one, we have to include these candles because they're the body is within the entire basing candle here, and we have to draw the base from the lowest body to the highest wick, right? So this would be the base, right? Now we didn't get a reaction off of it, but that would be the base, right? So let me find another example to give you, right? Now this would be another example, right? So we have a basing candle right here, right? Boom. The market base, strong impulse away, right? And it probably accomplished a few things, right? And then this is the entire candle, and we could see that the previous candles, the bodies of the previous candles fit within the base of the first basing candle. So we include these candles in the base, right? So it'd be from the lowest body to the highest wick, right? And that would be the base, right? So how I write that as a rule? Let's see. All right. So that's some of the rules for the basing candles, right? Now, according to the rules, a basing candle is a candle that the body is less than 50% of the candle, right? So it have a lot of candles on the chart that's like this. So this would be one, right? Whenever you see it have a candle like this, just one basing candle by itself, kind of look like a doji with a tight body and wide wicks, it's a safe bet to just take the entire candle as the base, right? The real base would be from the body to the highest wick. but it would be safe to take the entire candle because a lot of the times the market might just come up and not actually reach the body of the candle and come down, right? Now, another thing, right? We would call the the body of the candle. We would enter the proximal line, and then we would call the highest point the distal line, right? The idea is that the market comes to test the proximal line for you to get entry. However, if it reaches the distal line, then that means that all the orders that was here, because it's really and truly limit orders the market hitting when it reached that level, right? You want there to be enough limit orders to push the market down. However, if the market um, breaks through, then that means that the market ate up all the limit orders that's here, and there's no more sellers here. And obviously, there are more buyers than sellers, so the buyers would be in control, right? Because they were able to push past the seller's barrier, right? So I'm gonna just label this.
Question is this way the writer says it's similar to like a break and retest in a structure
Say that again.
like supply and demand. It would have basically similar to like a break and retest in a structure.
It's similar, but it's different. It's completely different, but it's similar. You know, because it have rules we follow that um that would invalidate the supply and demand zone. So, for example, um, this zone right here, even though we had a break and a retest and a sell, if the break doesn't follow our rules, then we can't enter the trade. So, if the break doesn't remove another supply demand zone or it doesn't break a trend line, then the retest would not be a high probability to enter. You understand?
Repeat that again for me.
I say one of the ways it would be different from a break and retest is that it has to follow certain rules, right? With a break and retest, if the market break consolidation and then it retests the support and resistance, you would enter short. But with supply and demand, it has to accomplish certain things before we could consider it a valid zone. So it would have to remove a supply and demand zone, or it would have to remove a trend line for us to consider the zone tradable.
Oh yeah, that I explained in the last video.
Yeah, right?
Yeah, because even this, I never learn supply and demand, and I learn still. I not like it. Like I think these are one of the main things I never learn, and these are all the institution them really trade
Yeah, this
because
go ahead.
them yeah them basically set them limit order, the buy orders, sell orders them a certain place. When the market reaches so either skyrocket go up or I see it just drop like crazy. You see me? I always wonder, oh
Yeah. Because this is like a bank strategy. This is like a hedge fund strategy. This is exactly how the big boys just trade, right?
yeah, exactly.
And a lot of people they don't know about this strategy, so you won't see a lot of people doing it. So you won't really come across somebody that will teach you the strategy, right? So back to the basing candles. I will just scroll through this and we'll just go through some basing candles, right? Just so you can get an idea.
Yeah.
So this would be a base right here. No, because the entire candle engulfs the bodies of these candles, then we would include this in the base, right? Now you realize if we had just take this base, then we probably would not get to enter this trade right here, right? And when the market come back to retest.
Yeah.
So This would be the entire base, right? For this this level here, this would be a basing candle. Also, and then when I before I was saying you could have a full candle as a base, right? This would be a base right here because it's basically a base is basically just a pause in the market. The market came up, it paused, it went sideways. This is the daily chart, right? On a 4 hour chart, 1 hour, you would see consolidation. On the daily chart, it's just one candle, right? Pause, sideways, and it continue up. And we know it have two different types of bases. It have well three. It have the valleys, right? The valleys would be this. Sorry. You get what I was trying to draw, right? It have the peaks, right? And then it have the continuation pattern. When it go up, sideways, up, right? Or down, sideways, down, right? And these are where the bases are located, right? Now, usually for the valleys and peaks, that would usually be reversal trades when the market reversing, right? For the CPs, just as he call it, continuation pattern. So that's when the market already trending and it pull back to the base and you'd enter, right? So this would be a CP, this would be a valley, this would be a valley, right? This would be a CP, right? All of these are basing candles. But when we won't take these. We won't consider these tradable, right? Because we want the base to just be a clean move, right? Clean up, sideways, clean up. When it start moving draggy like that, like the candles just small candles just dragging up. Um, we don't. It's not high probability, right? You want a strong impulse away, right? So like all of this, like when you see candles like these, that's we call this we call this kind of movement in the market compressed um supply, right? And whenever you see compressed supply, whenever you see the market just moving, have a lot of basing candles just dragging down, usually when the market hits the demand, it could fly through all of these candles very easy, right? So whenever you see the market consolidating, dragging down, you know that when it hits the next demand level, right, which would be this level right here, the market would could fly through this compressed supply very easily, right? That's just a tip to remember, right? So let me just draw this. This would be a base. You see how these candles are tucked nicely right here. That's a good example of a high probability base. That's like a clean base. You know, that's how you want to see it, right? Whenever you find them like that, you know that it's nice, it's beautiful, and it's clean. You know, like it's not supply and demand is not supposed to be hard to identify. If you find yourself having trouble lining up the candles for the base and you find it's hard to identify, then it's probably not a good zone to trade. Good zones are easy to spot, right? So I remember this is the daily chart. So even if you had to take this trade and it just went up for a short period of time, I'm sure this is a couple pips, right? This is 150 pips. I'm sure a lot of people would be satisfied with 100 pips, 50 pips, you know? You don't have to ride it forever. You can ride it for 1 to 3 whenever you're satisfied, right? So back to drawing bases, right? So this would be a base here because we had the base and we had the impulse. Now, you can have the base and you can have the impulse, but after you find the base and you find the impulse, you have to find what has the market accomplished. Has the market removed another supply and demand zone or has the market broken a trend line? Once you find that out, then you know if the zone is tradable or not, right? So if is this zone is would this zone be tradable? um, yeah, it would have been tradable because it removed this zone right here, right? Because this zone removed this zone. Like if you cross it over, then you could see that this zone removed push past the distal line here. But not all the time the levels just work, right? You have to use them in confluence with all the other stuff you learn. You don't just use this by itself. You use it with everything else you learn so that you can find a high probability setup, right? So most valleys and peaks could be a base. For the peak, you could when you find a peak like this, you could take the base from the most recent candle, right? A lot of the times for valleys and peaks, not all the time you would find basing candles, right? But you could take most valleys and peaks could be considered supply and demand zones once they um accomplish the two accomplishments I set out in the rules, right? So this would be a base, right? And we could see we had a reaction, right? So this would be another base, right? We could see that the first candle, because you could see this is a base, the market consolidated right here, right? One, two, three, four candles in the same spot. That's consolidation. That's basing, and it only has one, two, three. It has three basing candles here. The first candle is not really a basing candle, right? But we could identify that as a base, right? So you would draw it something like this: the highest point, the highest body, to the lowest wick, right? And you stretch it out, and then you can see the market reacted from it very well twice, right? This would be another base, right?
Gold.
And you could have a base within a base. So we see we have a base here, the market drop. We had a base here, the market drop. And then we had another base right here, right? And the market drop. Now, back to what we were saying, right? Um, for the impulse, right? Now the impulse for a high probability level, you need to have at least two full um extend, extended range candles, right? And what I mean by this is just it would be two um engulfing candles, two Marabosi candles, if you know your candles, two full body candles, two candles with strength, you know. It could be one, but if you can find a base with two, then that would be higher probability, right? So for example, this base right here, right? You had two full candles going leaving the zone, right? Two green candles leaving the zone. And that tells you that the market departed away from the zone with strength, right? The market left the zone strongly, so you could consider that zone to be you could consider that it has a lot of bias at that zone based on how the market leaves the level, right? How the market leaves the level is very important. If the market leaves the level slowly, then the level is not high probability, right? Market has to leave the level strongly, right? For it to be high probability. It could work if it's slow, but you want to look for high probability trades, right? So you wait for the market to leave the level strongly. If it leaves the levels with two strong candles, then you're in business. If it leaves the level with one stronger candle and then it moves away slowly, then you could be in business still, you know? It just won't be as strong as if it was two candles. And then you also have to take into consideration what has the level accomplished. And I keep repeating that because you can't just draw supply and demand where you see you had a base and you had a strong move away. You could, but the level has to accomplish something, right? So you know how to identify the base and candle. You know how to draw the base and candle, right? You might have to watch this video over a few times. And you know um, how the impulse should be departed from the level, right? You know what the level should accomplish for it to be considered a valid level, right? The next thing would be the location of the level. It matters where it's located on which time frame, right? You have to know where all your supply and demand levels are on all your time frames, right? Because if you find a demand level on a 4 hour time frame that's within the supply level of a weekly time frame, then it's probably not going to work. You want to be able to align your supply and demand levels, just like how you align the trend in the market, right? So, and you need to know which time frame is in control, which supply or demand is in control, right? So let me just screenshot this. Obviously, this lesson is, I won't say it's difficult, but it needs practice. It's more like just like muscle memory. I don't know. Like you need to practice this. Just make it a part of you, like a language. Right? So when you're analyzing the market using supply and demand, the first thing you want to do is locate your monthly level, right? Once the market reacting off a valid monthly level, then we could consider that supply or demand in control, right? So here we could see that this would be the latest demand level, right? And let's see. This would be the latest supply level, right? Now, how do we know that? Sometimes you had to take a step back to find why is that a valid level, right? So first of all, let me find out why this is a valid level, right? So this would be a supply level, right? Now, this level here is the level responsible for removing this level, right? So this is the valid supply level responsible for removing this level because we had a drop, base, drop, right? Remove this level. No, we had a base, then rally, right? Removing this level. So because the market rallied from this level and removed this level, which was responsible for removing this level, this is a valid demand zone, right? So we know that this is the next valid supply zone. Let's say none of this happened yet, right? So we would wait for the market if you trade in monthly chart to get to either one of these zones, right? Now we can see the market rally, drop, rally, drop. This is not a level because it didn't accomplish anything. This is not a level, even though we had the base and we had the drop, it's not a level. It looks nice. It looks like a nice level. It dropped, it based, and it had two extended range candles moving away from the level, but it's not a level because It didn't accomplish anything. It didn't remove a supply level and or demand level, and it didn't break a trend line, right? So now we have a trend because we have high, low, right? Now this candle based, right? And then it broke the trend line, right? It broke the trend line by forming another candle on the other side of the trend line, right? It didn't make a new high, but it broke the trend line, right? So we know that this is demand, right? So what happened? The market came down and reacted off this demand. It did not surpass the level, right? It just reacted off the level. It dropped and it reacted off the level, right? So this is how now we know that this is a valid supply level because the market dropped and it removed this level, right? This base and drop did not remove the level, it just went close enough. It just went close, right? So we know that this level is gone, and now we have this level and this level, right? So now we know where the monthly supply and demand is located. So we just draw monthly right here. Monthly demand zone, right? Monthly demand zone. And usually I would have them color coded, right? So I would put the monthly in a dark blue, right? So now we go down to the weekly, right? So according to the information we have, we know that the market is in a downtrend on a weekly time frame, right? It's in a downtrend on a monthly time frame too. So we look for our weekly supply and demand levels, right? So the valley. First, you obviously you would look for the valley and the peaks first, right? So this is a peak. This is a peak too, because this is the peak, drop, pull back. We can actually draw a trend line right here, right? Now this trend line isn't considered broken until the weekly candlestick close on the other side, and it has to be the entire candle, not the. You see how this wick is inside the trend line? It won't be considered broken until we have an entire candle on the other side, right? According to our rules, right? So we know this is the next value right here, right? So we can see that a market based over here. So we could actually draw the base like this, right? So this would be the next the nearest weekly supply because it based, it dropped, and it removed this demand right here, right? Just by a few pips, it removed this demand over here, right? So that's the nearest weekly supply, and nearest weekly demand would be right down here, right? Now this is demand because obviously we had a trend line right here. This was the base that was responsible for removing the trend line, right? Let's see. No, this is not a trend line. But yeah, sure, if we drop down to a lower time frame, we would see that this would be a daily base or whatever, and we can see the market reacted off of it, right? But anyways, so we know that the market is within the weekly supply zone and it's in a downtrend. So obviously we're looking for shorts within this zone. So we drop down to the daily and we mark off the daily supply zone now, right? The daily supply zone obviously would be these basing candles right here, right? Now the daily supply zone is nested within the weekly supply zone, right? The highest probability trades would be the zones nested within a zone. So if you're trading a weekly chart, you would enter here. If you're trading the daily chart, then you would enter here, right? If you're trading the 4 hour, then you would find the 4 hour zone within the daily and the weekly zone. Now, if you find a zone within a zone within a zone, then that's just increasing your probabilities of the trade actually working out, right? So another thing, we usually enter the trade a few pips before the proximal line because the market tends to come close to the zone and then drop. And a lot of the times they won't actually hit the zone. So a lot of the times we would actually enter early, right? So you can see here that the market didn't actually hit the zone, but it came close, right? So hopefully the market could push back up, come within this zone here for us to get a shot, right? But yeah, so for the, let's see, we don't, it's this area here, we don't have any daily demand, right? Because if we had to draw a daily trend line, it would go something like this, drop, it would go something like this, right? And the zone responsible, actually, yeah, the zone responsible for breaking this daily trend line would be right here, right? We had a rally, base, right? Base, this is the base right here. Broken, trend line broken, one candle on the other side. Market comes back to retest. I'm sure you probably could have found a 4 hour zone within this daily zone somewhere within here, right? For you to take a 4 hour long. But yeah, if you was entering just based off the daily supply and demand zone, you would have a buy here, stop loss here, right? So they just drop down to the 4 hour because we draw the zones on every time frame, and this is what you need to do, right? You need to have your zones marked off. 4 hour zone would be up here, right? Because we had the rally, the base, drop. The fuck? Yeah, right? 4 nested zone within the daily would be down here, right? And then it would have little 1 hour zones, 50-minute zones within this trend right here, you know. So if you are a trader and you trade in the market, then you'd probably draw a trend line within any within the zones and look for your reversal, right? So then you could draw this trend line here, right? And then once we get another candle push down and close below this trend line, then we could consider this area responsible for creating a supply zone because it base because a lot of the times the peaks could be the base when it's like that, right? If we get a candle close here, we get another 4 hour candle close below the trend line, then we know that this would be a valid supply zone. So if the market comes back to touch, then we could go short, right? And then we could also probably trade a little support and resistance around this area, based on what I learn. However, right? Okay, let me go to the questions. Let me see. Hmm. Yeah, You need to understand how to draw the base. That would help you draw it correctly, right? Panaman say go. I see you're gonna go. Okay.
Oh no, bro. When I say goal, I mean like we are teacher is goal. I don't really mean goal.
Oh, okay.
Yeah, man. I don't mean goal, man.
All right. So now we wanna see NZD.
I want to tell you, say, bro, just pre say NZD, USD, and AUD, USD move the same way. That's why I'm so upset. When I go work and come home today and say AUD kick me out, I'm like, shit. I mean, damn me, I'm gonna bank some money right now.
Yeah.
Isn't it? I mean, I try to grow a little account per month, 20 something dollar. I'm know that they want 150 or $160 right now. You know, trade go my way.
Yeah.
Shit.
So now we're gonna draw this trend line right here, right,
Oh, demand zone.
to confirm the demand zone right here, right?
Mm-hmm.
So we see we had the base, the impulse up,
Yeah.
strong impulse, and then now the market retraces the zone, right?
Yeah.
Now this would be on daily chart. This would be the daily entry because we enter in a few pips early.
Yeah.
And if you're taking the 4 hour, right,
Mm-hmm.
this would be the 4 hour zone right here, right?
Well, I missed the 4 hours on by a couple pips, boy.
Yeah, I mean that's why you had to enter a little early, right? I already entered this. Like I just
Them bad signal yeah each one, bro. Yeah.
Yeah, but you see, it's making sense, dog.
Yeah, that make a lot of sense because I see the demand zone. And before you start teach, like, man know what demand and supply was, but I don't really, although I don't really understand it fully yet, because as I said, that's the only thing we never learn
Mm-hmm.
when I learn. I don't know if you remember, say, something that they teach me still,
Yeah, I remember I talked to you a couple months ago. I sent you the
Yeah,
link and I was like, check it out. It'll
yeah.
help you.
So, that's the only thing we never learn. I'm know say like supply and demand, it's key in the market because the institution and the banks them use it. And if you don't know if you trade like the banks, it don't make sense to
True.
trade.
True.
Yeah, that's probably the most important strategy right here. How to use this properly. Most important.
So you're trade active right now, Gibbs?
Yeah, just a few pips. Just $30. I'll show you. Hold on.
Oh,
I'm gonna drop it in the group. Drop it in the group right now. But yeah, man, you see how I just break down that chart there from the monthly come right down.
Yeah.
I would do that more often, and
That's
whenever
how I get them sniper shots, boy.
whenever I decide to hop on the chart and analyze the market, however, I'll just send out a link. Even though you do a class, I'll just send out a link so you will see, how I just do it.
Of course.
It's just if you're online, click it. If you're not online, then I look.
Yeah, like that me I say, bro, like most of them trader want to know why you enter them, like if it's a demand zone. Because as I say, like we don't know much about it, the only thing we learn are support and resistance.
Mm-hmm.
You see me? So and then higher highs and lower highs and them something there. So them work, but you have to combine them with something else for them to
Yeah.
actually work.
Supply and demand have a lot of logic.
Yeah. You have to combine them.
Exactly. If you combine them with everything else you learn, then if you find a zone that line up with everything else you learn, then you'll be confident in placing a trade in that area.
Yeah, tell you. Just man, like we can't stop talking about it. Just like the AU trade.
Mm-hmm.
It's like I have like $22 in that account.
Yeah.
I'm spend there with a 0.1. So it's a $1 per pip.
Mm-hmm.
The stop loss are 16 pips.
Oh
With
Lord.
with so listen to the risk, 22 to 16. So 16 take away 22. You know how much left? I'm
Yeah.
risk to reward are like 9-1.
Mm-hmm.
Understand? The market job back for me, pull back for me till me leave with like $4 in another account and I say, I'm not coming out of this. Then I'm
Yeah.
gonna hit the stop loss and me start again. And the market drop back down straight in a profit before me leave, go work to the $20 more. So me did like $45 in profit. When I come back, I'm gonna move my stop loss to break even because I say I'm not gonna make this trade that turn against me while I'm gonna run it.
Yeah.
Damn. When I come back, the market stop me out in a profit and give me like 80 cents.
But watch here. I had this trade set up here, but you see how the market come close. It didn't enter, but it comes so close and it dropped,
Oh my.
right?
Yeah.
So we can use a strategy on the lower time frame too, right? So let's say,
That's the same supply and demand.
yeah, right? So this level here, you could look and you see once you see a nice base and a nice impulse away, then you want to confirm to see if the level
That,
accomplished something, right?
that right there, so was my entry.
So this was a nice base, and then we had an impulse away, and
Mhm.
we could say that this level, this was a demand level here because this level probably remove another level, remove this level over here, right?
Mhm.
Sometimes you had to backtrack it, right? So we know this was a level here, right? And then we could see that this level here remove it, right?
Mhm.
So then we scroll over and we would see that this level here remove this level over here just to validate the level to make sure it go work because
Yeah,
if you just trade a base and an impulse, it not all the time it go work. It had to have a reason, you know. So then you could, if you wanted to trade a lower time frame, you could have placed a trade right here, right? Stop loss above, right?
That was exactly my entry.
And then after you just hold that, and you'd have been a good 63 pips now.
But they even want to see it no more.
Let me see what your AUD look like. See that? All your Vanna look beautiful. Look at that. She look good, huh?
yeah, close that trade right.
I close half of it. I remember what I tell y'all about the negative 27. Watch how the market reacting, right? Because people tend to take profit. Market drop. This is the monthly demand. You see where I mark monthly demand? From here come down is monthly demand, right? So I know I'm looking for longs, right? And then we had the market drop to the 250 level,
It came and retest the trend line.
retest the trend line, Fibonacci 61.8.
That was like all a high probability, boy.
You see, you ain't want nothing more. Better just put your whole bank account on the straight, because you ain't want nothing more than that. Everything you learn, everything I've been teaching you for the last few weeks kind of line up right in this spot. You
The
see,
hardest thing,
when you see I find trees like this, and I find it, and then I look at the men in the class and I say, nobody send me this trade. I teaching them men, and nobody can send me this setup. I say, nah, man, all this slacking, man. All they supposed to be sending me this and say, hey, look what I find. And I say, all right, let me throw a couple hundred on it, you know?
Mm-hmm.
But yeah,
Probably because most person leave a trade that pair because when I even look on that.
yeah, well,
true, true.
so right now we could just draw a trend line and
Yeah,
some
you see, we getting all the consequences line about me personally. That like the confidence, you know.
you see the
I
confidence
think
come with
that
practice. If you
yeah,
practice a
well,
trade, if you place at least 10,000 trades over the next 2 months, you would gain your confidence.
true.
You have to keep trading. You don't have to wait for me to send you a setup. Like look at how much currency pairs I watching. You know, sometimes you analyze you analyze, you do a top down analysis on the different pairs you're trading, and then you just move to the next one, and you just keep analyzing and analyzing until you find one that line up.
How
You
many
know,
times a day you analyze?
for me, I'll just scroll through. When I find something, I just and I find some. When I find one trade for the day,
Mm-hmm.
I'll stop.
All right,
You
analyze
know.
them quick for me. Let me see.
Oh gosh, because I was done, but I just analyzed one Friday. Well, let me see. On US 30, right? We got on US 30. Whoever wanna stop, or you can stop now because class done. But I just go on US 30, right? US 30 up on a weekly, right? So
Supply.
we had a demand zone right here. Weekly demand, right? We know weekly demand is in control. Whenever a higher time frame demand in control, that's the you don't want to go against it. So you don't want to pin our daily against our weekly. You know,
Mm-hmm.
if weekly demand in control, then you should be looking for longs. You should be expecting the lower time frame supply levels to be removed, right? So we know weekly in control. I draw my weekly, and then we have another weekly. We have we have a weekly supply level here, but the level is not as strong. It's drawn out, but it's not as strong. And the reason why it's not as strong is because um one, the it wasn't able to remove the valley weekly demand, and usually the valleys and the peaks are the stronger demands, right? Not the CPs, right? And we wasn't able to get a full candle on the other side of the trend line, right? Now it's still weekly supply, but we just take into consideration that it might not be as strong, and we would probably just wait for confirmation. Whenever you're not sure about a level, you wait for confirmation. So you just wait for a lower level market reversal to take control, right? So you drop down to the daily, and we know this is the weekly this is the weekly supply zone, right? On the daily, we know that this would be the daily supply that was just removed, right? Now, the zone responsible for removing this zone, obviously, is this right here, pause in the market, right? Responsible for removing this zone. Now, we already had the market drop and react
So a
yesterday.
CP remove that supply.
It removed this zone, yeah. So, so now that it removed that zone, we know that from the time the zone was removed, then we know we can place some buy limits right here, right? But you would be careful because you know you're within a weekly supply zone. So you would expect you you could expect this zone to be broken, right? You had to be careful, you know. Now drop down to the 4 hour. Now we have a 4 hour zone here. What's taken? You know, the market base. All of this is the base right here, right? Four basing candles broke the trend line, and it hasn't gotten up to the 4 hour supply yet, and this would be the 4 hour demand responsible for removing this supply, right? So, I mean, if I was looking at this, it would have been a good trade to enter, you know, even though a lot of the information here kind of contradicted. The risk
Mm-hmm.
to reward would have been worth it because it would have been a small risk for a potential 4 to 5, you know. So if the market retrace back to this level, then I would consider taking it down, right? If it retraces back to that level. So, and that's how you have to look at it. You draw out your levels, you identify where the market is at your given time, and then you identify the area where you could find a good setup, you know, a good potential trade setup.
Proper.
So you need to up on your charts. You know, like you're looking at me do this, and like I said, you're looking at me do this, and it look easy. But from the minute time you go on that chat for yourself, when you go on that chat for yourself, your brain
You
fried.
don't know where to
You
start.
don't know exactly. You don't know where to start, right? You had to be able to yeah, you had to practice it. It's like muscle memory. I had to practice it, right?
It's best you start with the easier consequences and then work down to the hardest ones.
Yeah, that's us. I start with the easiest ones. Let's see, change.
Boy, bro, anytime I learn to trade US 30,
Facts.
but don't trade every
I
other
retire.
player. But now look for nothing else.
Yeah, you see US 30, oil and gold, they react to supply and demand good, you know? It has some pairs you could just use supply and demand alone to trade them. You gotta use nothing else. And it working.
Yeah, them commodities and then
Like there you have and go, right? So there you have and go monthly, right? So you have the monthly demand zone, the monthly supply zone, right? Look a little confusing. So we had the we had the weekly the market just react off the weekly supply, right? And that's why I was telling you, like you might see a supply or demand, or you might see an area far away, and you would think that the market cannot reach there now or this week, but really and truly, it's like the market can reach a certain zone in any amount of space at time possible. Like anything is possible. Like the market could jump 100 or 1,000 pips today for whatever reason, you know. So sometimes when you find your zones, um, and you find a nice setup, even though it's far away, you could still put your buyer limit orders on it because sometimes you just wake up in the morning and you see that the market reacted off of it, right?
So yeah, I'm actually had that question, you know. Like for supply and demand zones, the limits, them expire. Is there expiration date where you say, oh, like, I'm gonna take over my buy limit, I'm gonna take over my sell limit? Is there expiration fee?
Yeah, I'll tell you, right?
good question, boy.
So you had to know when the zone valid or when the zone is still valid, right? And that's simply knowing who's in control. So for example, and I was gonna teach this in the next lesson, right? When not to trade the zone. All right.
Well, I don't want to jump the gun. So if you have to teach the next lesson, then sure, but
Yeah, I'll go teach you to the next lesson, man, because there's a whole other chapter. You gotta know when to trade it and when not to trade it. Because you would have a nice juicy zone and you're not supposed to trade it because of certain things that happen, you know? But you stop it.
Decent session, boy. Oh.